squeezing American wallets harder than ever. The Pew Research Center survey shows that inflation is one of the biggest problems that Americans feel concerns them. As 62% of people surveyed say that it is in fact a very big problem. Many are feeling upset as prices for everyday goods continue to rise.
Every time I go buy groceries, it seems like everything is so much more expensive.
But why does the average American feel poorer now, even if wages have increased? Today we're going to be talking about the impacts of inflation on you, what areas are most heavily impacted by inflation, and how you can cut costs. The annual inflation rate dropped to 2.9% as of July 2024. It was previously at a high of around 9.1% 2 years ago. You can see that inflation peaked around 2021 and 2022. Even though the rate of inflation dropped, prices have increased dramatically year over year from 2021, so there is still an unfortunate large cumulative effect of the impact of inflation. One of the questions that you may ask is which objects are the most impacted by inflation? Statistics show that in particular, rent, utilities, and car insurance have shown the most significant increases. The Bureau of Labor Statistics states that 90% of the monthly increase in the Consumer Price Index came from rent increases. It is shown that those who rent are more impacted by inflation compared to those who purchased a house and have a mortgage. The Fed's interest rate increase to reel in inflation has indirectly impacted the mortgage rates. But homeowners who have gotten a fixed rate mortgage loan before the federal funds rate increase may not feel as much of an impact as the cost may not have changed. Over 90% of homeowners pay mortgage payments at a rate of 6% or lower. Rent and electricity are up 10% or more over the past 2 years, and car insurance is up nearly 40%. Car insurance and repair has jumped more than 18% in the past 2 years. So how would you cut costs? If you want to cut costs, try and see if you can do anything in these following areas. Number 1 is negotiate with your landlord by discussing lease renewals. Number 2 is try to downsize or relocate to more affordable areas. Or number 3 is seek roommates. For car insurance, try to shop around and compare quotes from multiple insurers. Maybe combine home and auto insurance and get a bundled deal. Now let's talk about who does inflation impact the most. High inflation disproportionately impacts lower and middle class Americans because they spend more money on things like rent. Further, as a result of increasing mortgage rates, those who have gotten mortgages at greater than 6% in recent times are disproportionately affected. Many Americans are also concerned about food costs. CNBC found that 54% of young Americans say that rising food costs have hit them the hardest. You may be asking, which foods are the most heavily impacted? The answer is meat. Specifically like eggs and beef.
Prices have risen for lots of foods, but the cost of eggs climbed the most in the last year, and consumers and businesses have scrambled to keep up.
You might have noticed those egg price increases. Meat prices have risen by more than the overall inflation rate. Egg prices have increased by over 50% since March 2020. Beef prices have increased 33% in the last 4.5 years, and chicken prices have increased 31%. If you're really struggling on costs, cutting down meat may be something that you might want to think about. I don't really promote skimping on food that you really need to eat or that you want to eat, but if this is something that is of concern for you, maybe you can try cutting it out. Food prices for dining out have risen by around 4.1% according to the Bureau of Labor Statistics. So if inflation is slowing down, why does the average American feel like everything is so unaffordable? The effects of high inflation from 2021 and 2022 are still lingering. Even though the rate of inflation has slowed, the cumulative effect of the year-over-year increase in prices is still felt today, and wages have not kept up with these increases. We saw that around 2021 and 2022, inflation did outpace the growth of wages. And we are still feeling that impact today as prices are around 21% higher than they were before the pandemic, therefore leading the cumulative effect to cause a very gloomy outlook on the economy. Thank you for watching this video and staying till the end. I hope you learned something new today. Subscribe for more finance updates if you would like, and I'll see you in the next video.